and welcome to a brand new episode of Smart Money. Now, the big investment call this year was on auto stocks. Stocks like M&M and Eicher Motors have risen 30 to 50% in 2022. In fact, in the last fortnight, two big fund houses, ICICI Pru and IDFC, came out with thematic mutual funds on the transportation and logistics sector. So today we speak to ICICI Pru about their new NFO. Our expert is Harish Bihani, Senior Fund Manager at ICICI Pru AMC. He's right here with me. Harish, thanks so much for joining us. But I think, the bigger question really is about the transportation and logistics sector itself, right? Just wanted to start by asking you about that. There's been massive growth potential talked about in this sector. What all does this entail?
Sure. Thanks, Sonia. When you think about this particular sector, you have to think about the auto OEM stocks, whether it's Maruti, Mahindra, Tatas of the world. You'll have TVS Motors and Bajaj Autos of the world. Then you have to think about the auto ancillary names, again, phenomenal companies here. You have Uno Minda, Sundaram Fasteners, Schaefflers of the world. And then you have logistic player, whether it's the Container Corporation, which is the largest rail operator, the road operators like a VR Logistics, even new age companies like a e-commerce delivery, or for that matter, Zomato is also included as a part of this particular theme.
So you're focusing on the whole auto and logistics space, right? Transportation is your bigger theme.
Absolutely. So we'll cover the entire gamut of auto ancillary, logistics, and anything which is related to this particular theme.
Okay, this is a very exciting space to be in, right? So let's take it one by one. The opportunity in the auto OEM space, let's talk about that. Because there is the wide umbrella is auto OEMs, but there's so much that comes below it. And many of these stocks have rallied already. I was talking about how M&M is up 50% this year.
Sure.
So where do you see the opportunity, both in terms of value and growth?
Sure. So you will have to think about this entire uptick that we have seen. You have to look at in the context of what can happen over the next 3 to 5 years. This entire spurt, this came in because things have started reviving in terms of volumes. The commodity prices have started cooling off in this particular sector, and people have started realizing that there is value in this particular sector, right? Now, we'll have to think about the context where we are in at this point in time. When you think about the last 10 years, for the passenger vehicle segment as well as the two-wheeler segment, they have been negligible to even marginal volume growth. And why has that happened? That has happened, let's look at the last 6 years, for example. Last 6 years, we had 6 major disruptions in India, or 5 major disruptions. We started with GST implementation, then it was followed by IL&FS crisis, then we had demonetization, it was followed by the COVID-19 crisis and the Russia-Ukraine crisis. So these were the macro changes which happened in our country, and fundamental changes or the global changes which led to impact on income of people. Then you had changes which happened because of regulatory reasons, which were micro reasons for this particular sector. You had the change from BS4 to BS6. You had insurance cost changes. You had axle load norm changes for commercial vehicle industry. You have safety norm changes for, again, the entire industry. So what happened is that in this industry, you had either a big macro hit because income got hit in certain parts, or you had a micro hit because regulatory norm changes, and then you had this entire cost increase which took place. Now we are at a point in time where things have started stabilizing. The incomes of people which got hit during COVID has started kind of gradually improving or inching up, right? Which means volume will come back gradually for this particular segment. Secondly, in terms of the overall value growth which is coming in this particular segment, that should also kind of start reflecting in numbers. Third is commodity prices have started coming off, right? So it's a combination of volume play, value play, because there's premiumization opportunity. We can speak more about that subsequently. And there's this margin improvement play, which is why we are looking at this theme very closely.
So there are a lot of, like we can see on the screen as well, right? There's passenger vehicles, there's utility vehicles, multi-purpose vehicles, there are light commercial vehicles, heavy, and the two-wheeler space. Now, these are very, very different brackets, right?
Right.
Two-wheelers, for example, are still struggling in the export market. Domestic market has not recovered to its full capacity. So particularly for that space, I mean, what kind of opportunities do you see? And after very long bear market, how are you so confident that there will be growth returning in the two-wheeler space?
Absolutely. So we'll again have to think about the context, as we already kind of discussed, that there were issues in terms of an income hit, which had an impact on the demand. Now let's divide India into 3 buckets. You look at the top 25 to 30% of India today, they have better income versus pre-COVID. They're all doing well, right? They're purchasing more, they're doing more discretionary purchase. Look at the next 40%, beyond that 30%. The middle 40% is what is struggling or was struggling till about a year back. their income is still below pre-COVID, but things are gradually reviving for this particular 40%. It's still not back to pre-COVID numbers, right? Which is where you saw that hit to the entry-level cars. You saw that hit to that entry-level two-wheelers. And this is the particular segment which is kind of slowly and steadily improving as we speak, right? So we'll have to think about where is the demand coming from at this point in time. Demand is coming from more premium cars, more premium two-wheelers. You're seeing more electric vehicles consumption at this point in time. The bottom part is where there's a hit, which is going to revive over the next couple of years. And this is going to be a gradual process. So we aren't kind of at this point in time making a hypothesis that this is going to be a very fast recovery. This is going to be a gradual recovery over the next couple of years. But thankfully, it seems to us, but from a demand side as well as from the cost side, things have hit a bottom and things can only gradually improve from here on.
Okay, there was a very interesting graph actually. I just want my director to pull it up once again. The number of cars per 1,000 people in India,
Correct.
right, compared to what we see across the world.
Correct.
So there are just 24 cars in India per 1,000 people compared to say US having 340 cars and Italy at 650. Now this is not apples to apples comparison because
Correct.
the per capita GDP is very different for developed countries, and for our own country, you know, we have issues like infrastructure issues, road problems, etc. So I just want to talk about, is that a very simplistic argument that we are on a structural uptrend only because the penetration is so low? And what kind of sustainable growth do you see?
Sure. Sonia, you'll have to think about, you know, there's a lot of noise in the equity markets, there's a lot of global volatility, and we all get bogged down by near-term stuff. But think about India. India is a $3.5 trillion ballpark, $3.5 trillion economy. We'll move to a $10 trillion economy in the next 12 to 15 years, right? We can debate it'll happen in 12 years, you will tell me 15 years, somebody will tell me a different time frame. So if that happens, the per capita income on average for a large part of the population will start inching up to closer to 2,000 and higher. It's already happened in certain parts of India, in certain states like Maharashtra, Gujarat, Karnataka, where you're seeing that the overall consumption is far higher. Once it happens across India, that is where you will start seeing this entire penetration which you spoke about in terms of the per person overall consumption at this point in time is far, far lower, both in terms of two-wheeler as well as passenger vehicle. This will start kind of inching up. So this is a big opportunity. We as a country are going to move up to a much higher number. Per capita income will move up. And finally, with that should start reflecting in volume, whether it's the entry-level car or whether it's some of the premium cars.
Okay, and we all know the listed players, right? Here, there's M&M, there's Maruti, there is Tata Motors, of course. But auto ancillaries, I want to talk about that. It's a very wide scope over there.
Right.
Because there are maybe 100 auto ancillaries in a car, right? Auto parts, rather.
Right.
Tell us, where all do the opportunities lie?
It's there all across. Our companies, when you look at our entrepreneurs, and the kind of work that they are doing at this point in time, phenomenal work our entrepreneurs are doing. Just to kind of, you showed this particular graph over here. Say, for example, the alloy wheels, which is a part where 100% was imported till a couple of years back. Today, 70% is done in India, and next 2 years, 100% will be done in India. So this is an import substitution play, right? And this is being done by our entrepreneurs who are identifying areas which can be done in India at the lowest cost. You have opportunities in new areas like ADAS, sensors, BMS. So there's a whole host of opportunity which is coming up in the entire auto ancillary space.
So you want to talk about the companies, of course, these are not, of course, buy recommendations, but
Right.
which are the companies that are doing parking sensors, door switch panels, alloy wheels that you spoke about, the leading players there?
Sure. So I'll give you a couple of examples, and without naming companies, but to give you a rough idea of how things are shaping up. You think about one of the largest fasteners company in India, right? Now there's this PLI incentive that has come up. With that, they are doing a 350 crore capex for the export market. So they are not only gaining with higher proportion of overall volumes coming from the domestic market, and they're getting into newer product lines. Then they are also trying to do capex with all these incentives for the export market. Similarly, when you think about one of the largest bearing companies in India, it has identified a couple of key components. Again, with this PLI incentive, it makes sense to manufacture in India, not only for the Indian market, but for the export market. You have one of the largest, well-diversified auto ancillary player.
So like Minda Industries, for example.
For
right?
example,
I
Minda
mean,
Industries.
Every part of the car, I think there's like 80% of the car that Minda supplies to.
And you look at how they have kind of overall look at their journey over the last 5 to 10 years.
The value
They've
chain.
identified the components, which component should work in India? What is the volume at this point in time? How will this shape over the next couple of years? Can we indigenize? Can we make this in India? And finally, the right kind of partnership. So this is a very structural trend, which is not only going to help the auto ancillary companies capture the domestic market in a much higher way, and there are good companies doing that, but significant part of the export market, because this entire China plus one and Europe plus one theme is for real. This is going to take time. People talk about near-term numbers and say there's going to be volatility and things won't play out. But this is a far more structural trend which will play out over the next couple of years.
Also electric vehicles, right? I mean, FADA put out the data this week where they spoke about a 200% rise overall in industry and over 150% in passenger vehicles, etc. We've seen a new launch from Hero in the electric vehicle space. So within that bracket, which are the companies in the auto ancillary space that could dominate?
So again, you look at auto ancillary, we'll divide it between two-wheeler companies and the four-wheeler companies. You look at two-wheelers, there are about 18 to 20 companies, new companies which are trying to penetrate this particular market. Nonetheless, you look at the incumbents, they are all working hard to ensure that they're on the right side of disruption. They're trying to get the products which should ensure that they gain market share incrementally. Similarly, you look at the four-wheeler players. Most four-wheeler players have got credible products or are in the process of getting those credible products in the market. So at this point in time, what we think is the listed incumbent players have a decent chance to ensure that they kind of retain the market share or in some cases gain. That said, there are certain companies that we have identified which are not on the right side of disruption, haven't invested so much.
Which ones?
Unfortunately, we can't name that, but it will get reflected in our portfolio soon. So which is where this entire active management will come into play. We'll try and kind of have significant underweights and name which we think are not on the right side of disruption will lose out, and vice versa. We'll have very high weights and names which we think are on the right side of disruption, will gain more market share, have the right model cycle, or are the right auto ancillary company which are gaining share as one of the companies you mentioned.
Okay, well, let's do one thing. There's also the logistics sector which is huge in its own way. So we'll slip into a short break. Don't go anywhere. When we come back, more on smart money. We'll talk about the logistics sector and how you can invest there. Stay tuned.